All right. Thank you. Thanks for having me. It's good to see you all. Thanks for being here. If you have any questions as you go, or as I go, let me know. I've got the comments open. I've got the questions open. Looking forward to hearing your feedback. I'm going to go ahead and get started by making my lawyers happy. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation should be construed as investment advice or the solicitation to buy a security. I hope you enjoyed that as much as I did. My name is Jeff Gibby, as Dave said. I just want to kind of just talk a little bit about me so you know who I am. I started here at MetaStock 28 years ago, if you can believe that, and it's been a really a great experience. I love working here. The environment is great. The employee retention is really good. 13 years is kind of the average that we've got for all of our employees here. And the customer retention is amazing as well. It's a software that we really, really like to promote. A lot of us, including myself, trade very, very actively during the day. I personally, Serge was, I've worked with Serge, the previous speaker, but he was talking about finding opportunities. And I personally love our ability to scan inside the product. So I hope you had a chance to read this. A couple of things off of here is we have been in business for a very, very long time, 1982. We're rated A+ by the Better Business Bureau, and we have markets because we get our data from LSEG, the London Stock Exchange Group. We can do anything I show you today in any market on Earth. Okay, I'm not going to spend the whole time that I have, the 40 minutes I have, just talking about kind of why you should buy MetaStock. I have a lesson I want to get to, but before I start with that lesson, I do want to say 32 years in a row, MetaStock has been rated the best software in its price category for, well, 32 years in a row. All right, very, very cool. So let's go ahead and get started. Today, what I want to talk a little bit about is MACD actually, and trading plans. I think having a trading plan is super important. I think it lends itself to kind of giving you good discipline. I think as a way to kind of help you understand how a trading plan works, I'm going to talk a lot about Gerald Appel's MACD, how you use it, how to implement it, how to trade it, and kind of how to interpret it as well. So we're going to talk about that. We'll talk a little bit about testing trading ideas, and I've got a special offer if you want to try the MetaStock software program. We're going to let you do it at a really, really reduced rate. So let's go ahead and get started. And again, I've got a question a little bit for you guys as we get going here. So what do you think is the best profession for trading? Okay, I've put some options here just to make it easier so you don't have to type it out. But in terms of the professions for trading, what do you think is the best? Is it teacher, educator? That'd be option A. Engineer or architect? That would be option B. I don't know why I grouped those together. Psychologist, psychiatrist, those seem to make sense together. A pilot would be D. Performer would be E. F, artist, musician would be F. So let me know what your guess is. We've already got a guess from Mr. Jones who's saying D. We've got C. And as we talk about this, one of the things that I've done when I initially started at MetaStock, I started in inside sales. And so I talked to a lot of people about how they're trading and what they can do to improve their trading, what they were looking for. A lot of times it was maybe stock selection or better education or, you know, that kind of stuff. But for the last decade, 20 years or so, what I've been doing is like actually working with people that are speaking, like Serge Berger before me, Rahul Arora after me, and just talking a lot to people that develop and create systems and people that know a lot more about the market than I do. And I think it's kind of interesting, kind of this question in particular, because over the years I've worked with a couple of, well, a lot of people, and some of which I very, very much respect, that fall into a lot of these categories. So particularly C and particularly D. So there's a gentleman by the name of Dr. Alexander Elder. He wrote Come Into My Trading Room and quite a few other books, very, very good books on trading. And he actually started his career as a psychologist or a psychiatrist. I don't remember exactly which one it was. Another person that comes to mind, Jake Bernstein, he placed his first trade in 1962, which is well before I was born. I started in the 74, but he also started as a clinical psychiatrist and has some really interesting stories around that. In terms of pilots, I've known quite a few pilots. Actually, performers too. There's quite a number of performers, but in terms of pilots, a guy that I've got a lot of respect for, he's retired now, a gentleman by the name of Greg Morris, was a literal Top Gun. He in World War II, he wrote a book on candlesticks where he did a statistical analysis of all the candlesticks. Ended up at the end of his career, he's managing about $19 billion for estate and money management, and now he kind of just travels a lot and enjoys his retirement. He comes into the office a little bit. Chuck Hughes too. It was also a Top Gun. So pilots, I think there are some room for that as well. The correct answer though is D, pilot. I kind of got off on a little bit of a tangent there. I have to remember not to. The correct answer is pilot. Over the years, I've thought about why is the pilot the best profession for trading? And for me, I believe it has to do with discipline. When you're a pilot, you're very, very disciplined in the routines that you're doing. When you take off, for example, there's a complete checklist that you go through every time you take off. When you land, there's a complete checklist that you go through every time you land. When you when you go into an emergency, there's a complete checklist that you go through. And so it's a very, very disciplined profession. And I think that's why. Discipline is key. And I think discipline, following a plan, having a good money management in place is key to what you're doing, or to success in the marketplace. Richard Dennis, if you don't know who this is, very quick story about Richard Dennis. Richard Dennis was labeled Prince of the Pit. He borrowed something like, well, actually, I might have it in the notes here. Do I? I do. Here we go. All right. Borrowed about $1,600, and he made that into about $350 million in about 6 years. Very, very famous trader in the 80s. He believed he could teach trading. He actually got a group of 23 traders together. It was called the Turtle Traders. You might have heard of it. 21, another interesting weird tidbit, 21 of those were male and 2 were female of that initial 23. They funded him with their own money. He had a partner, Richard Dennis. His partner was Bill Eckhart. Richard thought, hey, I can teach people how to trade. And this is where that experiment came together. Bill Eckhart didn't think you could teach people how to trade. And so they decided to fund 23 traders. And it wasn't successful. It was insanely successful. They made it an aggregate profit over the course of the first 5 years of about $175 million. And what he always said, or what he said, one of the quotes that I like from him, is that you could always publish rules in a newspaper and nobody would follow them. The key to trading is consistency and discipline. And I think that's great. I think that's really kind of important. What I want to talk today about is business plans. And I think business plans, the idea of, okay, when I go into a trade, I understand why I'm getting into a trade. When I get out of a trade, I understand why I'm getting out. For me, it's usually a stop loss or a profit protection stop. But I think that consistency and discipline, the ability to stick to a plan, is really kind of what separates the traders that stick around for a long time and are successful and the ones that wash out. And we all know a lot of them wash out. So what I want to talk today about is what technical analysis is and how it can help you build a business plan around trading. And to do that, we're going to talk about MACD. So there we go. Again, if you have questions, let me know. I think I can see them. This gentleman here is Gerald Appel. he developed the MACD about 40 years ago. He wrote about 17 books on investments. He actually published a newspaper for almost 5 decades called Systems and Forecasts. He actually also published 5 books on photography. Today, what I want to do, MACD is a very, very popular indicator. I want to talk a little bit about how it's calculated, how to use it, how to understand it, and how it can give signals. So we're going to go ahead and kind of start at the top there. I don't have a lot of pre-planned. I actually don't have a chart open yet. If you have a chart you'd want me to look at as we kind of talk about MACD and systems testing and looking at business plans, type it in the chat for me, because I'm happy. If not, it's probably going to be Roblox, which has been just an insanely good stock to trade this year. But let me know what stock you want to look at. So if you're not familiar with MACD, here's some of the advantages of MACD. MACD is objective. And I love this about technical analysis in general and MACD. Generally, one of the things I think is the strength of technical analysis. A pure technician will say that actually Steve Bigelow used to say fundamentals of a stock don't matter. It's the perception of those fundamentals by the traders. A pure technician would say that the study of the charts and the study of where support and resistance go and the study of technical analysis is a shortcut to fundamentals, because the price is always baked into the fundamentals or into the price. Everything known about the stock is built into the price. So when we talk about technical analysis, one of the best things about it, in my opinion, is its objectivity. At no point in today am I going to say, here's what tariffs are going to do. Here's what inflation is going to do. Here's what the interest rates are going to do. No, we're going to be looking at the chart, and is it going up? Is it going on down? What's the trend of the chart? What does the momentum look like of the chart? And as a result, it's objective and not subjective. KP, this is being recorded and it will be sent to you. Thanks for the question, man. Okay, it's also pretty easy to interpret it, particularly with MACD. We'll talk about that as well, and it will help you in the overall trend. Okay, when we talk about MACD, it's a trend indicator, but it's also a momentum indicator. I'll talk more about that as we get into the calculation of it. Some disadvantages to MACD: you're using 3 moving averages. We'll talk about that. It can be prone to whipsaw, and it is a lagging indicator. So let's go ahead and kind of just get into the calculation of MACD. I don't see anybody typing any symbols, but if you type a symbol, there's a good chance we'll look at it. Okay, you're welcome, KP, of course. All right, so let's go ahead and I'll just open it up a chart real quick with MetaStock, and I'll talk a little bit about how the MACD is calculated and kind of how to objectively look at it. So you go ahead and go to the chart here. As I've mentioned, Steve says MRK. I was about ready to just go to Roblox. A.O. Jones says XYZ. So we'll go ahead and open up those two. And what I actually want is a bit of a blank chart here. So it's going to come up with a whole bunch of stuff on there just because of the normal template I've got, or the default template here. So let me just clean up this chart real quick. That's not what I meant to do. I'm going to go view. Okay, expert advisor. Detach. Okay, I'm just going to really quickly delete all the indicators off of Merck here. Okay, we'll start with a clean chart. This is a candle chart. I'm going to go ahead and zoom in just a little bit, and I'm going to add a couple moving averages. Okay, now when Gerald Appel developed the MACD indicator, he did not use whole numbers. He used what was it? He used a 0.075 exponential moving average and a 0.15. Okay. Those don't line up with whole numbers, but the closest are 26 and 12. So I'm going to actually use the 26 and the 12 exponential moving average to talk a little bit about how it's calculated, okay? But it's important to note that it's not exact. It's pretty close though, okay? I've got a chart of MRK. It's all blank right now. What I'm going to do is add a couple of indicators here. So there are several hundred indicators in MetaStock. The first couple that I want to use is the moving average, okay? I'm going to put, like I said, I'm going to put on the 26 exponential. And I'm going to go ahead and, while I'm in here, I'm going to make it thick, and I'm going to make it a little bit of a different color. I want it to be pretty for you. Okay, so there's the 26. I'm gonna go ahead and kind of add the 12-period exponential moving average as well. We'll go ahead and click on OK. Okay, now I didn't make that pretty and I didn't make it thick, so I'm just gonna come back in here real quick and I'm gonna make it a different color. I'm gonna make it a bit thicker so you can see it a little bit better on the internet. And I actually made it the same color because I guess I think that color is pretty. Let's go with purple for this one. Okay, now if I wanted to calculate a MACD, I would take a 0.75 and a 0.15 and I subtract them, and that would give me the MACD value. Okay. Another way to say that, just using the moving averages, is if I took the shorter term moving average, this 12 exponential, and I subtracted it from this longer term moving average, the 26 exponential, that would give me the value of the MACD. I'm going to plot the MACD as well. So let me come back in here to the indicator quick list. I'll just type in MACD right here. I'm going to do the one with the histogram. Okay. We'll go ahead and plot that on the chart. I'm going to go ahead and just kind of make things a little bit thicker here. We'll leave the colors the same. I just like you to make sure you can see it, and we'll do the histogram the same as well. Okay. All right. I want you to ignore the dotted line and the histogram for now. I just want to talk about this red line. If I was to take the value of this shorter term moving average and subtract it from the value of this longer term moving average, that would give me the value of the red line, the value of the MACD. Okay, very simple, not very complicated. When we're looking at the MACD, we're looking at the difference between the shorter term and the longer term moving average. What that means is we're looking at if we're in a pretty good downtrend. Let's call this a pretty good downtrend right here. Call it a pretty good downtrend. We're in a pretty good downtrend. What's going to happen is the faster it's moving down, the faster the more separation there is going to be between your shorter term moving average and your longer term moving average, which is going to give pretty steep MACD values. Okay, so it is a measurement of momentum. Okay, as long as we're kind of pulling down, you're going to have a negative MACD value, and it's been negative for quite some time here on Merck. And in addition to that, if it's trending up, like it was trending back up here, you're going to have positive values. Okay, it's very, very simple. If we're in kind of, I'm going to call this area a little bit more of a sideways market. I'm going to say that it started maybe right here in May. We've been a little bit sideways all summer. It might be kind of coming out of that, but if we have a sideways market, you're going to have much shallower MACDs. You can kind of see that we kind of advanced around the zero line, but it's doing fairly shallow. This is why MACD can look at trend, and it can look at momentum. Okay, so that's simple. Okay, this MACD value is what we're kind of looking at in term, and when we're looking at that, we're just looking at the difference between those two moving averages. If you have questions, ask. I don't see any. Okay. The next line, then, so that's it. That's the first indicator. The second indicator is what they call the signal line. That's this line right here. Okay. That signal line is simply a 9-period exponential moving average of the stochastic, or I'm sorry, the MACD. let's try and say the right word here. I'll try and use my right words. But this is what Gerald Appel called the signal line, and it's just like I said, an exponential moving average of the signal line. Okay. The reason he called it a signal line is you can use it as a signal. If you're trading down below your if your MACD is trading down below the signal line, it's going to be in a bearish phase, as you can right here. Once it crosses back up above, it's going to enter a bullish phase. When it crosses down below the signal line, then it's going to be in a bearish phase. To better illustrate this, what I'm going to do is I'm actually going to attach what we call an expert advisor in MetaStock. We call it the MACD. Well, there's a MACD expert advisor. And it's going to put a trend ribbon on my chart. I'm going to go ahead and move this trend ribbon right. Maybe not. Okay, there we go. Right here. So when the MACD crosses down below its signal line, what you'll see is it comes into kind of a bit of a bearish phase. Okay. In other words, we expect the stock to go down. In this case, we expect Merck to go down. When it crosses up above its signal line, like it does right here, you'll see that it enters a bullish phase. When it crosses back down, it enters a bearish, et cetera, et cetera, et cetera. So very, very simply, when the MACD is up above its signal line, it's in a bullish phase. When it's down below its signal line, it's in a bearish phase. Okay. It's called a signal line because a classic buy signal would be when the MACD crosses up above the signal line. Okay. So right here, I'm going to zoom in just a little bit on the chart right here. We'll kind of focus in on maybe this area just so that we can kind of make sure we're paying attention at the same time or to the same thing. But I'm scrolling the wrong way. So you can see right here where we crossed down below our signal line, we went from bullish to bearish. It generated a MACD sell signal. That's the first way we can use MACD as an indicator. If we go from bullish to bearish, here we're bullish, we go down to bearish, we're anticipating that the stock is going to get bearish for a while. And so since we're anticipating this price to the stock to move down, it doesn't always do it. But since we're anticipating, that's where we get our classic MACD sell signal. Okay. That's the first way you can look at MACD. Before I talk about the other two, I just want to talk about the histogram so I can make sure I cover all of the bases. This histogram right now, right here, wasn't developed initially by Gerald Appel. I think I have in my, I'm blanking on his name. It was developed by Thomas Asprey, which was what I was thinking. I just wanted to make sure I didn't unquote it. The MACD histogram is simply the signal line subtracted from the MACD value. I'm sorry, the MACD value subtracted from the signal line. Okay, so you can look at the MACD histogram. When you look at the MACD histogram, all you're looking at is the difference between these two lines. So when there's a crossover, your MACD histogram will go from negative to positive, indicating that there's been a crossover. Okay. Let's talk about, and I'm just looking at my time. I think I got about 17 minutes. I'm gonna have to hurry. Let's talk a little bit about the ways that you can look at a MACD. Okay. So we already talked about the first one. The first one is, are we bullish or bearish? That's pretty easy to understand. It's objective as well, right? And since it's objective, I can say, okay, well, here we had a buy signal. And then if we would have bought here and sold here, how would that have worked for us, right? Here we had a sell signal. And then if we sold here and bought here, how would that work for us? Okay. It's objective, meaning it's repeatable, meaning if you understand it, everybody here, all 97 people in the room here can say, okay, well, we'll come to the same conclusion, right? I like the fact that it's objective. The second way that you can look at MACD is as a overbought, oversold indicator. And there's some things that I want to kind of be a little bit cautious about when I talk about overbought, oversold indicator. One of the things that come to my mind quite a bit is that the market can stay in a trend for a really, really long time. You can go overbought and oversold. That doesn't mean it's going to necessarily reverse, right? The market can stay uninsane for longer than you can stay like solvent, right? But you can, there is the more overbought or oversold something gets, the more likely there's going to be a reversion to the mean. Okay, and so the second method that you can use the MACD is as an overbought, oversold indicator. Okay, I want to call your attention to kind of a couple of points on this chart right here. You've got it's normal green, red charts. Right here, you start to see some blue highlights. It's indicating that the MACD is entering an oversold or an overbought territory. In this case, it's oversold. Okay, right here, you can see those blue highlights on here. I like the way that they're worded in the expert advisor. If I can come in here and to go to view expert commentary, I'm just going to move my commentary to that day. So it'll analyze that day, ignoring the data behind it. Right now, it's going to say the MACD is in an oversold range. However, prices may continue to move lower for some time. Wait for prices to move higher before considering any other positions. I love the commentary because it helps explain what's going on. You know, we have commentaries not just for MACD, but like candlestick patterns and stochastics and Bollinger Bands and you name it. There's a couple hundred. There's even a Turtle Trader one that's built into here. But it can help you educate around different indicator methods and how they work. And I think that education is helpful for your discipline. If you understand why you're doing something, if you understand where your stops are, I think it'll help you be more disciplined. in the future. Okay, actually you're seeing a bullish divergence here. So that's actually kind of cool. It is detecting a bullish divergence, which is the third method I wanted to talk a little bit about. Dr. Alexander Elder, I referenced him a little bit earlier, called MACD divergence or divergence in general. I have the quote in here. Yeah, we're going to skip a little bit. I already talked about most of this anyway. The spreadsheets, the PowerPoint is for guidance only. Anyway, in the book, A New Trading for Living, Dr. Alexander Elder states divergences are among the most powerful signals in technical analysis. When prices make new highs and MACD fails to make new highs, this is called a bearish divergence. Well, he didn't say that last part. He just said the part in quotes. So divergence is another method for looking at MACD. And Alexander Elder calls MACD divergence one of the most powerful indicators in technical analysis. So let's kind of talk a little bit about how to kind of look for divergence. I don't know that we'll see any on the chart here. It did find one right here. I'm going to go ahead and kind of, I don't see where it's drawing that though. Okay, anyway, let me just kind of do it from where I'm kind of starting to see it. If I wanted to kind of, right now, if I wanted to kind of look for a MACD divergence the way Dr. Elder would look for it, what I would kind of look, what he likes to do it is he'll look at MACD histogram. So he looks at the blue lines here, okay? I see it, he wants a cross above zero. So if I'm looking for kind of the troughs here, you've got a trough here, came up above zero, and you have a trough here. This is actually going to be a divergence. So what I'm going to do here is I'm going to draw that out, okay? And we have a bit of an upward slope here, okay? If I look at price during the same time, I'm going to call this our bottom here, and that our bottom here. This is awfully pointing down. So prices are making new lows here. Those lows aren't being supported by MACD. That's a divergence. And it's the first time I've actually drawn one on a chart. Usually I say, well, imagine if this line was pointing the other way. On this particular one, Dr. Alexander would be very, very vocal in the way that he described that. He would call that breaking the backs of the bears. He would call it the most powerful signal of technical analysis. We didn't have a huge run up yet. But at this point where we're getting that MACD divergence, it certainly has stopped going down. So there you go. Rahul wants to look at KIE. I don't think I have time. KIE, talk about real quick. Let me look at the options real quick here. Let me kind of, there you go, Rahul. There's your KIE. I've never looked at that symbol before. Let me just kind of reiterate exactly kind of what I want to say, because I can come to a point really quickly here. One of the things I love about technical analysis, not necessarily MACD, is the objectivity. We're not making subjective decisions. We're looking at the chart and trying to make decisions about what the chart is doing, okay? The reason I kind of talk about MACD is it's a lot of, I've found over the years, it's an indicator a lot of people look at, but they don't really understand how it's used. So I hope you learned something today. One of the things I like about the fact that it's subjective is I can go in there and I can look at where the buys came in. We had a buy here and a sell, that was good. We had a buy here and a sell here, that wasn't so good. I can kind of see exactly how that works. And because it's subjective, I can go in and say, okay, how did this work over time? And I'm just going to show you this real quick. It's the last thing I have time to show you. But what I'm going to do is, I'm going to come in here and I'm just going to select some systems here. I'm going to ask the question, how well did this work? Okay. And I don't have time to kind of run through this all, which is why I'm kind of going pretty quick with this. But let's go ahead and just kind of select. MetaStock does have about 200 different methodologies. Maybe, actually, I think it's closer to 400 that are built in that you can go in and test. So if I want to say, okay, well, this Jeff Gibby guy spent 30 minutes talking about MACD. Does it work well? I can compare it against the stocks that I want to trade. So I'm going to test all of these 92 systems. I'm going to test them on MRK, and I don't think I'll have a chance to look at kind of the results too detailed. But I can go back 2 years, I can go back 10 years, I can go back 20 years, I can go back 30 years. And I can say, take every single trade and tell me which ones worked the best. Okay, I'm gonna have it go ahead and start, but I don't think, oh, wait, I put this in the wrong place. Let me put it up here. I should know how to run this thing, XYZ. Okay. The point I'm trying to make is this is gonna go through, actually it's running pretty quick. It's going to go through and tell us how well those methodologies worked, how well they worked over X amount of years. However, we want to go back. You could go back to the 1980s with the data in the US that we get from London Stock Exchange Group. But I can know immediately, okay, these methodologies worked well over that last, I tested 2 years real quick. These are the methodologies that worked over those two stocks. These are the methodologies that didn't. For me, I want to focus on the ones that work over here. This one had 63 trades, probably not that one, that's really active, but this dynamic momentum index had 8 trades in the last 2 years. So I can kind of go in and see what the drawdowns look like, what everything kind of turns out. I can learn about that methodology, why I'm getting buy and sell signals. And if it's something that I really, really like, I can even scan to find opportunities, which I'd show you if I had a little bit more time. I'm just kind of running a little bit low on it. So in any case, though, it's a fantastic tool. It's the reason, the tools that are in MetaStock, like the ability to test trading ideas, the ability to scan for methodologies, the ability to get the real-time feedback and commentary. Those are and all of our really awesome customers, those are the reason it's been rated for 32 years in a row as the best software in its price category. So we do have 2 different versions. We have a full real-time version that includes news. It's $210 per month is the starting price for that. And we have a DC version. DC used to be end of day, but it's not anymore. With our DC version, you get actually live bars. You can run scans during the day. You can look at daily, weekly, monthly. You can do everything I showed you today. And you even get a streaming, updating 15-minute delay bar, all for $75 a month. So there are a couple bonuses that are just included when you buy MetaStock. I did a lesson yesterday on Ichimoku Master. It's a fantastic method. We've got a really good expert in there that'll teach you about Ichimoku Master. It'll walk you through everything. You can scan for the primary and secondary setups. You can see a score. It's amazing. It does a really, really good job of kind of helping you implement a very, very popular method that was developed by Koichi Hasada back in the 1930s and delivered to the public in the 1960s. So that's just included. It has an, like it's, I don't have time to tell you how cool it is. You'll just have to take my word for it. We do also include we include several hundred systems. So what I did is I kind of highlighted the ones I like. We just put in a gap identification system. So if you're interested in trading gaps, you can scan for gaps. You can see whether or not they have volume to verify it. And gaps are simple to use. There's a commentary that'll help you understand what's going on with them. So we also did include Michael Murmer's ETS. So it's another methodology that I'd recommend you take a look at. It tests really well as well. And we did include the indicator that Jake just developed with Brian Lotta, which is the Jake Bernstein expansion contraction. I'm not going to kind of get into a lot of details on there, but Jake's awesome. And yeah. Again, he started his trading in the 60, I think his first trade was in 62. We do want this to work for you. So we're going to give you our Unleash the Power MetaStock. It's going to kind of give you 14 videos to help you get started. It's normally $99. I never charge for it. I want this to be helpful for you. I understand that if MetaStock works for you as well as it works for me, I use it every single day, all day. If you like it as much as I do, you're going to be a customer for life. So we want to make sure that you're one of our customers that have been with us, like a lot of our customers, for decades. So we're going to include some training. We do also include a white glove installation service where they'll sit down with you. They'll walk you through a bunch of stuff. They'll help you with it. And that's just included. You'll also get access to our support team. We keep more people in support than we keep in sales and marketing put together. So if you have a question, you can call them, you can chat with them, you can send them an email, whatever works for you. If you send them a letter, it's been a while since we got a letter, to be honest, but we used to all the time. If you send them a letter, they'll actually send you a letter back. So anyway, they do a really good job of helping you with any questions you've got. So $75 a month. The offer that I'm going to do for you for being here today is if you buy a month, we'll give you a second and third month for free. So $75, that's 3 months. Little quick math in my head, that says it's about $25 per month. So for $25 a month, you're going to get access to the software, all of the data that you need to use the software. You'll get that white glove installation support. You'll get all of the hundreds of systems that are included with it. You get everything that we talked about. Again, it's $75 a month. Right now, today is August 20th, 2025. So for $75, that's September, October, November, you'll be running for that $75 to almost Thanksgiving. And hopefully it's something that's beneficial for you. Again, I use it every single day to find trades, to identify trades. And I've been, I just think in terms of the stuff that we do, testing is really cool. Like scanning is really one of the things as somebody that's been looking at markets for 30 years, I do every day. So if you have questions, if you want to get a little bit more information, give us a call, 800-882-3040. Mention the festival webinar so that they give you the 3 months for the price of one. If you have other questions, you can also chat with us, metastock.com/saleschat. You can also set up for this at metastock.com/festival3for1. I feel like I came in at good time, but maybe a little bit early. So in any case, give it a go. There's no commitment. You don't have to keep it going if it's not helpful for you. If it doesn't help you find better trades, you can cancel. There is a reason it's been rated #1 for 32 years in a row. And the software can pay for itself. Give it a go. metastock.com/festival3for1, 800-882-3040, metastock.com/saleschat. Dave, thanks for having me.